it doesn't matter because you as a creditor would never have access to it. If they use gold to back U.S. treasuries, and then there's a default, and you present your U.S. treasury and try to take their gold, remember that your debtor has nuclear arms. Think this through. The extent to which they would monetize this gold, to the extent that a budget would be tied to the real income and outgo of the U.S. government, that'll never happen. It would reduce their power. If their power to spend was constrained by a golden constant. So could they revalue the gold? And could they use the gold that they allegedly have at Fort Knox to make the U.S. seem not so far underwater? Sure. Would that matter to the efficacy of the U.S. dollar? Certainly not, because the creditor could never perfect against the collateral. Jesse, I've been a lender for 50 years, and I have no interest in collateral that I can't perfect against.
And do you think it would have any implications for the gold price at all?
Yeah, for 6 weeks. People are dumb. And people who are long gold, who have trauma holding gold over a long weekend, it's important to them. You remember the silver squeeze all that time ago when there was all this wonderful narrative around silver, and you had all of these silver adherents. And when the squeeze didn't materialize in the time frame that they had in mind, 20 seconds, 30 seconds, all that love for silver turned to hate. The internet chatter and the chatter inspired by some paid newsletters around the revaluation of gold is something that excites the chattering classes, but it has nothing to do with the long-term implications for, as an example, the US dollar, or frankly, gold itself, are enjoying a lot of love. The hate that existed 3 years ago around the silver juniors is completely gone. You are seeing silver juniors, I won't name them for fear of making more enemies than I already have, which isn't necessary, but you're seeing silver explorers that I don't think have a hope of making money at $75 silver, complete multi-million-dollar financings to drill off dog deposits. A circumstance where people are putting up, multi-million dollars to drill off deposits that have, I would suspect, very little chance of becoming economic, tells me that the hate that existed in the sector is gone. Conversely, in my experience, and leadership in the market changes from the metal to the best producers, conditions precedent that we've already seen. The precious metals narrative begins to become appealing to the generalist investor. That has not happened in the precious metals market yet. You haven't seen the generalist investor in the precious metals market, particularly the precious metals equities markets. When that happens, in my experience, I've seen it happen 3 times, leadership changes from gold to silver. I suspect because of silver's lower unit value, or perhaps because of its reputation for upside volatility, or both. Jesse, when it happens, and it will happen, I think, you won't need Rick Rule to tell you what happened. The discussion of a move in silver from 36 to 38 will become irrelevant. When silver moves, it is a truly spectacular event. What I've learned is that if you have an asset class that you think could triple, and you think that the increase in the asset class will be magnified 2 or 3 times in the higher quality equities around that asset class, if you're 2 years early, it doesn't matter. The rent that you get paid when the event occurs, if you think that the event is a probability as opposed to a possibility, the rent that you get paid is so extraordinary that the holding cost of maintaining a position for a year and a half or 2 years in anticipation becomes negligible, absolutely negligible. Now, I need to say that when the high quality junior stocks a year and a half, 2 years ago were really roundly hated to make it, become economic. When those stocks were hated, I already owned positions in all of them from a geological point of view, but I added more from a financial point of view. I thought when the hate dissipates, these stocks are going to absolutely have a bounce. That turned out to be true. And the stock that I bought as a consequence of my believing that they were hated, I'm giving back to the market now. The reason to own that stock has gone away. And for me, the stock has to go away. That doesn't mean I'm selling my core positions in those stocks. I'm not selling my core positions. But I added stock in excess of what constituted a reasonable core position for me, as long as we're using the baseball parlance. I remember well the decade of the 70s. And I remember that there were at least 3 punctuations where the gold market declined by 20, 25% or more. I remember one epoch, if that's the right phrase, 1975, where the gold quote fell by half. Investors who are going to participate in this gold bull market or precious metals bull market, and I suggest that they do, need to study history. They really, truly need to study history. In the very near term, I wouldn't be surprised if this market's overbought. The anti-US dollar trade, the anti-Trump trade, is an extremely crowded trade. The fact that leadership has changed from gold to the senior gold stocks confirms that we are in a real bull market, but the bull market may in the very near term be overbought. And you are seeing money not creeping, but rather cascading down the quality trail. You are seeing private placements that would have gone begging 2 years from now being oversubscribed. You're seeing investors of the caliber of Eric Sprott and Rick Rule getting cut back in private placements. This is not an undercapitalized market anymore. So in the very near term, a couple other observations. There's a lot of liquidity in the market. And risk-off assets, tech stocks, gold stocks, are moving very well. The VIX, the graph of the VIX looks like the electrocardiogram of a corpse. So I think you need to keep that in mind. What would put the gold market on steroids would be a major interest rate cut in the United States. That would signify to investors and savers worldwide that American society, reflected by American politicians, had no interest in maintaining the sanctity of the US dollar. We saw that at the end of 1975, when, through 1975, the political will of the United States was to deal with inflation by raising the interest rate. We did that, cratered the gold price, knocked it off by half. Also cratered the Dow, cratered housing starts, obliterated the long bond market, and Congress lost their nerve. And the Fed at the end of 1975 instituted a major reduction in interest rates. That set off a romp in the bull market in gold. Gold went from $100 to $850. My suspicion is if you saw a major interest rate cut in the US or a series of smaller cuts, then the game would be on in earnest, despite the fact that they may or may not be of interest to your subscribers. Portfolios need to be constructed primarily of the best. And there is a lot of room left in those stocks. I would suggest with Agnico as an example, the development pipeline suggests that it can grow like a junior. But since you've asked me to set it aside, I will set it aside, having not set it aside. Your subscribers need to compose their portfolio primarily of high-quality names. There's no particular sense in being right about the narrative and taking too much risk in stock selection. But coming down the quality trail, there's a whole bunch of places, literally a whole bunch of places that you can go. You can look for companies, as an example, G mining, where they have definable competitive advantages, where they're selling at a reasonable price relative to their existing producing assets, but where they are virtually certain to grow. That company will be taken over. This is a cost of capital game. And so if the value arbitrage, like Rick Rule, don't begin to look at the high quality developers, the G minings of the world, the emeralds of the world, where their development pipelines are looking like Agnico Eagle's pipelines, but in smaller fashion, and where the management team has definable competitive advantages. If the value arbitrageurs don't up the prices of those companies, other companies will take them over. That will happen. So those are two names that I could mention. Another time-honored way to make money as money flows down the quality trail in mining is to look for the turnarounds. One name that comes to mind immediately is Equinox. It looks like Ross Beatty has exhausted his patience in Equinox. It would appear as though the CEO has been allowed to pursue other employment opportunities. It would appear, too, that their hard rock deposit in Canada is finally reaching stride, a year late and a couple $100 million late. But it's happening. The last quarter was pretty attractive. If that's true, and if the Marathon deposit comes into production, sort of on time, sort of on budget, that will affect a turnaround in Equinox, a company that's really, truly in the penalty box. in the company leadership, it will allow them to sell Los Filos, which they need to do. They can't operate in West Mexico. Ross is going to hate me for saying this, but those assets need to be operated by somebody who can do what you have to do in the local community in Western Mexico. Probably enable them, if they want to sell the California assets. They very, very, very recently got fast-track permitting for Castle Mountain, which is an important step in California. But Ross would be able, I think, with ramped-up Canadian production, to get rid of his higher-cost, more marginal operations, and then focus on a new acquisition. That's what Ross does. Ross starts a story with fairly low-quality assets, which he throws capital at and increases the profitability of. He uses that as a base to acquire higher quality assets. When he does it, he sells the lower quality assets. He monetizes them and continues to upgrade his quality. I watched him do it with Lumina, and he'll do it here. So that's the sort of a name when I was being persecuted that I do when I'm being subsidized. On the face of it, that statement is ridiculous. America has the uranium. We have a collection of tier 2 deposits that's going to work because our cost of capital is going to go sub-zero because the voters are dumb enough to subsidize us. That doesn't mean that we shouldn't speculate on the stupidity of voters. That's a constant, and one is wise to speculate on constants. But you need to look behind the narrative at deposit that will generate substantial free cash flow at today's uranium price with a lower cost of capital. The fact the voter is stupid, which is demonstrable, is one thing. But that stupidity won't be applied equally across a bunch of hopefuls. There's now probably 30 companies that purport to be in the uranium business in the US. There are probably 4 that are viable. There may be a couple of the pretenders who get lucky or get smart and ascend to the viable ranks. But right now, I would suspect that the viable ranks are 4 out of 30. Your subscribers who aren't skilled enough to segregate between the good, the bad, and the ugly are going to lose a lot of money. Some form of economic renaissance in the United States, not by subsidizing uranium production, but rather by admitting that nuclear power is the cheapest baseload power in the world that doesn't generate carbon. And the United States is very right to mobilize its remaining technical skill sets to get out of the way to allow this to occur. In truth, the best uranium technology in the world now isn't American technology. The Canadians, Cameco, bought Westinghouse and co-opted what was in effect Japanese technology. So the best uranium technology in the world is now Canadian technology. We need to understand that. But I suspect that the size of the U.S. market and the weight of the stupidity of the U.S. Treasury will mean that Cameco will be very willing to share that technology with a high bid, which will certainly be the U.S.